What's up, everybody? Lawrence Linker here from XD Academy. As you know, we're all about crypto education. We've been doing an amazing series with our friends over at Spartan Group, where we interview founders of some of the most successful crypto projects in the world. That series is called The Blueprint. Please check it out. But today, I want to do a very special podcast where I talk to 10x research analyst Markus Thielen. Markus has made huge waves across the industry recently by releasing a report that says that he expects that the ETF may not be approved. Now, the market broadly expects that the ETF will be approved. You can read this in all of the journalism, that's covering the industry, as well as see it in the market structure itself. So this is a very contrarian view from a very, very smart analyst who has had a tremendous amount of correct calls recently and is really in the hot seat right now with a lot of people upset at him for making this call. Many people even blaming him for the recent correction that we had just the other day. So it's Jan 5th right now. The ETF approval may literally be coming out by the time that this podcast is published, but I think this is just too topical and too interesting not to release. So let's go right into it. Here we go with Markus Thielen. All right, Markus, great to have you with us. So everybody, I'm here with Markus Thielen, founder of 10x Research, who recently wrote a paper that has really gotten a lot of attention in the Bitcoin community and the investment industry at large, where you revised a previously bullish opinion, expressed some concerns that the ETF approval that we're all expecting this or next week may actually not come to pass, and recommending some options that investors can use to hedge that risk. This story kind of blew up into this incredible narrative of you single-handedly crashing the market. And I want to kind of talk about this and some of the other questions that have come out of this today. Markus, thank you for being with us.
Thanks for having me.
So, Markus, let's jump right into this. On December 18th, you released a newsletter that asked the question, will the SEC give green light to Bitcoin spot ETFs in January? You mentioned that the market's expectation of approval for the ETF had risen from 90% to 95%. Do you stand by that analysis today?
I think market expectations are somewhere between 90 to 98% that we're hearing from various commentators. So yes, I agree. Expectations are extremely high that the Bitcoin ETFs will be approved today or within the next 2, 3, 4 days.
Okay, so no change there. You also called back to an earlier warning that a typical December correction was upon us. Can you go into some more detail on what made you think a market correction was imminent?
Yes. So when you look back actually towards August last year. So August last year. We were bearish. We have been bullish from the beginning of the year. We turned, bearish a couple of times. One of those events was in August last year. It had to do with a potential China risk. We came up with a trading idea. People should, take a short position basically. And within less than 24 hours, Bitcoin dropped 10%. But then in September, we turned, massively bullish. So we went on CoinDesk TV. It's well covered in the media, of course. All of our work, our calls have been, mostly correct last year. So we had a really hot hand. And I think this is why this report this week has actually had such a large following. But on September 28th last year, we said people should allocate towards the Bitcoin miners for really the ultimate upside in 2024. And a lot of those stocks have actually gone up 100, 200, 300% during this period. So we had a really, really good track record. And we also have said already since February 1st last year that Bitcoin could squeeze towards 45,000 into year end, so towards Christmas. So this, of course, has occurred. And, come October, November, and so on, we were like maximum bullish. And we said the squeeze is coming to 45K. And, people were really suspect about it. We went a few times on CoinDesk TV and elaborated on those comments. And, in the end, they had to admit, yes, we were right. And then, as you just referred, came sort of like the December 8th period, where we started to warn people that we might come now into a consolidation period. And there were like a few factors here. So number one, of course, there was a dovishness from the Fed. There was a change in macro factors. They were supportive. We have seen a large rally in stocks as well during this period. But it was, of course, associated with a lot of positive tailwind from the ETF announcements. But what was associated with this, and this is something we pointed really out in Q4 last year, there was a lot of tethers being minted. So there was a lot of money in our interpretation going from fiat into USDT, which probably would have been converted into BTC. And this has been like a big driver for the BTC rally. So somebody institutional size was probably allocating around something like $9 billion US dollars, as we calculated, and really helping to really push the market up. But then come early December, we noticed that those minting processes actually came to a halt. So suddenly minting was really, minuscule. So new money was entering the market. And traditionally, for example, last year, we also saw a rally into the second week of December and then a sell-off. Of course, this was after the FTX collapse, but then not much happened for the rest of the year, for the last 2 weeks of Christmas. So we expected, because people had, all this P&L, traders wanted to go on holiday, they would be cutting positions, because also, and this is very crucial, the funding rates were quite high, something in the region of like 20 to 30%. So if you're a trader and you're holding, perp futures with very high funding rates, you're losing actually a lot of money if the market doesn't do much. So we were expecting that people would simply liquidate some of their positions and, take like, a breather for the rest of the year. And that's kind of like where we started, advising people, how do you position yourself? One trade we suggested was, let's sell. And by the way, so when we sent out, our comments was on December 8th, as we said, but the market actually made a high on December 9th. So this was really 1 day away from the high. And this was on a Friday. What we suggested is, if the market is really kept here, you could sell this end of December 45K strike call option, and buy the call option with the 45K strike for January, and you kind of cheapen the cost for the January one by something like 30%. So we're really trying to start it from being really, really bullish from end of September to switch the positions around, where we suddenly lock in the P&L and don't lose a lot of money. So this is where we're trying to look around what we can do and just position ourselves for the next move higher. As we also then wrote that we expected the move higher to come, after Christmas, when people just basically come back from the Christmas, period.
Yeah. Okay. So it sounds like largely market structure driven analysis, which is what drove you to say, hey, maybe it's time that we're going to see some movement in the other direction. But let's go back to talking about the ETF specifically again. On December 21st, you reiterated the narrative that anticipation of ETF approval was likely to send Bitcoin prices higher. You referenced the rapid and frequent responses and productive dialogue between the SEC and the ETF issuers as a sign of significant headway towards approval. You also pointed out the trend towards investors putting money into Bitcoin mining stocks, which we just discussed. But a few days later, you warned that it was time to take profit on the mining stocks. So December 21st, it sounds like you're softening a little bit on the bullish sentiment, but at this point you're still sounds like expecting the ETF to be approved. Is that fair?
No, I expect that these ETFs might not be approved, but the market expects something like a 90 to 98% probability that they will be approved. So I'm a bit more cautious, and that's why we have warned investors to position themselves so that they don't lose any money really if we have a correction. But of course, if we don't have a correction, that they also don't lose much money.
Oh, okay. I think this is a very important distinction. And as a reader of your, as a paid subscriber of your newsletter and follower of your research, I could see this a little bit, but I think this might be where a lot of people are getting confused. Previously, you had often referenced the probability of ETF approval, but is it fair to say you were really referencing the market's expectation that the ETF was going to be approved without necessarily commenting on the likelihood of it from your own perspective. Is that fair to say?
Yes, I think that's fair to say, because it wasn't my opinion, it's just what the market was pricing in. And I think an important point is also that, I run a lot of market structure data models, I run a lot of regression models, and our call, for example, for these mining stocks in September was that they were trading at massive discount to the price of Bitcoin itself. So there was a huge valuation gap, because when Bitcoin crossed north of 30,000, people were not really focused on these mining stocks, and our view was that people would have to buy them just to get allocations or be positioned into any Bitcoin ETF approval period, and they would just buy those stocks as sort of like a proxy. But then what happened is in December, when we ran and we kept running these models, of course, all the time really, and this really distinguishes us from from anybody else in crypto, because again, we run all of those models that other people are not running. And these are the models, we have brought over from, our hedge fund days in TradFi really. But what happened in December, basically something like, Marathon and MicroStrategy, they were trading suddenly at fair value or at 20 to 30% premiums to the price of Bitcoin. And what happened really is that people were initially not aware, or TradFi people were not aware suddenly of the Bitcoin rally, but as this rally sustained, they became more confident. And then we were warning end of December to get out of those stocks. And what we wanted to do, and this for me, as goes back to my trading career, is like a big event coming, and I want to be as liquid as possible and not be stuck in illiquid stocks that can move up or down 20 or 30% in a day, because it's just far too risky. So for us, it's really just risk management. And the really, really important, I think, aspect, and of course, as you said, when people kind of just read the headline of our reports and, don't know us because they're not following us, because they don't have access to kind of the paid or premium subscription stuff, has actually a lot of stuff happened in the background that people are not aware. Because since October, I've been really focused on these approvals and why they failed during previous periods. And while it's really like a small chance, based on other people's opinion, that this ETF announcement will fail, and we might get an announcement already today, as the speculation is from two media agencies. But I've been looking into this very closely, spoken with some people who know the process really well. I think there is a chance where the risk reward is just massive if this call is right, and if it's wrong, we would lose 1.6, 1.7% just by buying put options, and then the jury is still out if the market even rallies after this, right? So, but as you said, what has really sort of changed from the SEC side, all this news that we're hearing, especially the drumbeats from Bloomberg, is the discussion between the Bloomberg journalists and the SEC staff. But the SEC staff is not the decision maker. The SEC staff just prepares the material and hands it over to 5 commissioners, and the 5 commissioners will make a decision. And 3 of those 5 commissioners are Democrats, and I think there is still a significant chance that it will not pass from political perspective, but also, and I've been aware since really October about this, and it's been luring, I guess, or brewing in the background, that there might not be a sufficient market surveillance sharing agreement of significant size in place from these applicants. And as we have seen, the SEC has given a deadline for December 29th to fulfill certain, requirements. This might not have been a requirement officially. It might be a reason that has been held back. I don't know. Of course, we have to wait. I think it's very difficult to throw stones now without really having an announcement and just and just looking into what we all want to happen. Of course, we all want that this ETF gets approved, right? We're all part of the industry. We all, I think, benefit if it gets approved. We just from or not we, but it's just me, from a trading and from a market insights and analysis perspective, I'm just pointing out there is really an outsized risk here if this does not go through, because the market is so confident and so over, pricing in the probability of this occurring. And, I think the important aspect here is really how we then started to trade from January 1st this year, right? I mean, Bitcoin started from like 42,000, rallied immediately to 45,000. So we were very bullish. We thought the market can probably squeeze to 50,000 because during the previous three halving years, 2012, 2016, and 2020, which of course also coincide with the US election years, what we have seen, the average performance is usually a quick 17-20% rally in January, which results in a fake out, and then the market makes a low in March before it really ramps up into the year end and has a almost like a 200% rally. But what I was worried about is that this is another fake out. So we were actually having discussions with clients already for the last 2 months. Are we having this fake out again? Is our view correct that the low is actually this year in March or not? But we started the year quite bullish because we expected first this initial squeeze, but we were, mindful that if there is a weakness occurring, that we need to, change our views here. And that's kind of like how it's sort of like all led from, bullish initially to bearish. But what we also had is, of course, we run a lot of trading models in the background that just kind of like, makes us aware if there's the probability of the market going higher or lower. And as I was saying that for the first time since August last year, we had a bearish trading signal for Bitcoin occurring on Wednesday morning.
Yeah.
This surprised us ourselves.
Yeah, I hear what you're saying, and I want to highlight one thing in particular, which is this put strategy that you've recommended. I don't think anyone can argue that at a 1.6% cost that it's a great hedge, right? So definitely, something that investors should consider. But I want to ask specifically about the connection between the caution around market structure versus the caution around ETF not being approved, right? Are those is there any correlation between those things? Are you reading in the market structure, the fact that maybe there is some powerful insiders that are pricing in an ETF failure, or are we talking about totally independent things here?
No, what we are talking about that when the minting of tethers stopped in early December, that the baton was passed on basically to the Bitcoin futures trader. So it went from a market that was spot driven to a market that was futures driven. And futures driven means really, leveraged trading. We have been quite bullish in terms of the funding rate this year. But what happened is the funding rate moved in December from something like 20 to 30% to 50 to 60 to 65% in early January. So this was suddenly a massive long building that really has occurred without really the support, based on our interpretation, of the underlying Bitcoin spot market, which we would have seen, we think, through the minting of tethers that would have maybe found its way then into Bitcoin. And that's why we thought that the market might be vulnerable to a correction, because the funding rate was massively high, which represented massive long bets. Open interest had increased from 7 billion to 12 billion. So this was around like a 5 billion allocation really since this whole ramp up in September started. plus the 9 billion in tethers that were minted. So we were estimating, 14 billion at least have entered the market, through these two, let's call them the venues. Some is maybe macro related or other factors, but net, there might have been really 10 billion allocated based on this ETF. And our view was there are like three outcomes here. Number one, the ETF gets rejected, and I think everybody would agree in that case, Bitcoin would probably decline. Then the other outcome is it gets approved. But if the positioning is already so stretched and so long, we can see suddenly a sell the news event, because we have seen a sell the news event when the Bitcoin futures were listed in 2017 under, of course, a democratically, nominated SEC chairman and CFTC chairman. Now, of course, it's complete opposite. But also, when the Bitcoin futures were launched, we have seen a large sell-off. So we have seen a large sell-off after the listing of the Bitcoin futures in 2017. And then we have seen a large sell-off when the Bitcoin futures ETF were launched. So you can make an argument that during the previous two cases, there can be a sell the news event. So even in a positive announcement, the market could sell off. The only way really that we would lose money on this trade if we have a positive announcement, and of course the market rallies because suddenly there's all this inflow, which can still disappoint because again we came from 26,000 and now, or when we sent out the note, we were at 45,000. So it was like a 70% increase of the expectations of all this money coming into Bitcoin ETFs.
Got it. I understand. So basically, you're sort of like game theorying this out to say, here's a couple different scenarios that could happen, and there's really only one scenario, which is where the ETF gets approved and the market responds positively, where we would lose any money on hedging, right? And that loss would be quite contained. But I want to ask.
Can I add one more thing, which is really important? So, which we also wrote in this report. So we said, of course, there's two things we would lose here, right? We would lose the 1.6, 1.7% in the put option premium, but we would also miss out on a potential rally. Like call it opportunity cost. But what we said is, if we are wrong and the market rallies, we are very confident that actually we can catch up this rally. Because what we wrote is the market, or at least in our case, we would focus then on a potential next round of approvals for an Ethereum ETF, which could happen in May. So even if Bitcoin ETFs get approved, we would be switching then into Ethereum, and we would expect Ethereum to outperform Bitcoin. So yes, we would be behind if next week, for example, or today, these ETFs get approved, but we are confident that we can catch up with performance, because it might take the market a couple of days to realize actually the next trade is not Bitcoin here, the next trade is Ethereum, especially also because the Bitcoin dominance has been declining from 53% to 50%. So there is already some internal shift happening here.
Got it. And I have to, first of all, I have to give you some credit. These are some incredibly courageous calls that you make, and you've obviously done the research to back it up. You have been right like a stunning amount of times in recent history. So I think we all have to kind of take you seriously. I do want to ask one last time, I promise, about your statements about the ETF approval specifically, because it was just very recently where you mentioned, and I think this was taken out of context a little bit to basically Markus Thielen says the ETF is dead. It's not happening, right? But some of the points you brought up earlier about like the SEC governors or whatever they're called that will ultimately approve the ETF, being Democrats, and the other problems that you mentioned, weren't those true a few weeks back as well? So is this something that you've been thinking about all along, or did something change to where you felt like you needed to point out more emphatically the possibility of this ETF not being approved?
So this has been on my mind since October. I was aware of these factors in October, but it was really up until December 29 to really solve those things. And the question really is, are these important or not? Right? Is it like a market surveillance sharing agreement of importance? Previously, these ETFs were voted down. I think when you ask people why they were voted down, hardly anybody can tell you actually why, because nobody really looked into this. And yes, the SEC staff has been working with these issuers, but we think there is really a possibility that this will be used to not approve them, because the SEC has really tried to delay any Bitcoin ETF approval as much as they can, and of course they're playing, with time here. But what also has happened is, Gary Gensler, the SEC chair, gave an interview in December where he basically still called there was a lot of wash trading, a lot of fraud, a lot of non-compliance in crypto. And I think previously he also has said, well, the court of the District of Columbia, has ruled, in the Grayscale case that we should, revisit our decision of non-converting, the Grayscale trust into an ETF. So we're going to do it, he said, right? But we are very confident, as he said in December, he said we are very confident in our process and in our previous decision, something like along those lines. I mean, this doesn't sound to me as he's like, oh, we have been defeated. The court told us to approve the thing, so we're going to go ahead. It sounded to me still when I was revisiting, these comments, over Christmas, over the holidays, really going through what he said, trying to find like any, bits and pieces by any of these 5 commissioners that they would be leaning towards, because all what we have right now is really, statements from, media agencies that speak to the SEC staff. But again, the SEC staff only makes recommendations. And, just look at this, if you would recommend something to Donald Trump, he makes up his own mind. And I think this might be similar in this case. And that's kind of like how I looked at it. And it was just for me then, coming into this year, that I was still bullish and expected to squeeze to 50,000. But then the longer I looked into it and the more I kind of like revisited some of those comments, why the ETFs were previously voted down, how strong commentary, was from the SEC chair or other members, that I said, what, we need to make a call here. And after a really great rally last year and already locking in the P&L for this year, let's just really like lock it in through put options. And then really in an ideal case scenario, be there if the market trades lower, and then, be massively ahead of everybody versus, if the news comes out and we rally 5% or 10%, well, we are behind, but then we can make it up through some of our other calls where we're quite confident that we really can catch up the market.
Yeah, I like this. Very, very prudent point of view. And Markus, I guess if we can just wrap this up, this seems to me in many ways a story of people like just piecing together the headlines and not having the patience or the interest to like go into detail. I think this is a huge mistake. One of the things that my friend Arthur Hayes, co-founder of BitMEX, always talks about, and we have a course coming out with him soon about building your investment thesis. And I asked him about this, like where can people find information or free information to get started building a crypto investment thesis. And he goes, free information is worthless. If you're not willing to pay for information and research, then you have no business being in this game. So going back to you, how can people get the good stuff from Markus Thielen so that they don't have to be just headline reading fools?
Well, I think here is, very, very important, right? Because what happened is, when I write for a metrics board, it's usually an 8, 9, 10, 12-page report. And what happened here is, of course, the first page is usually kind of like, sort of like a mixture between an executive summary and a teaser. But this week, I was extremely careful to really not reveal any real information, because the report is usually for Matrixport, VIP clients. It's not really generally for the public. Is usually not released to the media or anything. And what happened is that normally I publish this report on a Thursday or Friday, but because of these events that are occurring potentially this Friday, today with any like announcement or not announcement, or next week, I decided to publish this report a day earlier, which was of course a day after I still sent out a bullish comment, because I wanted to give people the time to position themselves, because they might not be ready. They needed to kind of digest or talk about it, with their investment team. But I wanted to give people the time really that they have, Thursday or Friday. And actually, in the report I wrote, if you have not heard anything by Friday that the ETFs are approved, we would urge you to hedge. So in our report, we didn't, we didn't write anything about a crash is coming. We see, if they don't come, a correction will come, and I think everybody will agree that this will come. But we said, prepare yourself, and this is why we released it earlier. And of course, people on Twitter, they don't have access to the report. They have only access to the first page. And again, I was very careful not to reveal any information, because it was just really for Matrixport clients in this case. And of course, people were like, well, the page doesn't say much. It's, but of course, it's behind the paywall. And, there's a saying, of course, about stuff that is free. I personally know that, a couple of people that have been followed, my calls, they really made, with $100, I don't know, say investment, subscribing to the newsletter, and then some of the capital, they made a couple of 100,000 returns, and this is not sensational, this is real money. And, we run like data and analysis that not many other people are running. So it's just really like a question, how much is really your financial, world worth to you, right? But I think in an environment where there is overflow of information, especially on Twitter, I mean, how much do you really learn, and do you really get any actionable ideas? And this is, for example, how we differentiate ourselves, because, we are not journalists, right? I mean, people were asking, why did I change sort of like my mind, right? And who have I spoken to from the SEC? But we are not a mouthpiece from the SEC, right? We are not, a media company. We are really like, we are traders. We are, analytics, market insights, and trade idea provider, really. And that's really the difference. And if you find it somewhere else, find it, okay, good, right? But who really provides you trade ideas before things happen, right? And I think everybody needs to make their own decision. How much is this worth for you, right? But I think, we have seen, great results from our trades. And I think this is why this trade or this report really, made all these market waves, because people have, realized we had like really great calls.
All right, Markus, if people go to 10xresearch.co, can they subscribe to your premium newsletter?
Yes, we have, various, forms of subscriptions, from newsletter to trading signals to a full institutional grade product. People can check it out and get in touch with us, and then we can see if we can take it further.
All right, Markus is too humble to shill his website himself, so I'll do it for him. I'm a subscriber. I highly recommend it. I hope you guys will check it out. Markus, thank you so much for being here with us. You've got an incredible. I'm so excited to see, to keep reading and see where this goes, because you've just made just so many incredible calls in the last couple months. I genuinely hope that you're wrong about the ETF. I have a bad feeling that you're not, but either way, the puts are in place, so we'll be all right.
Yeah.
Thanks so much for being with us.
Thank you.
Okay, guys, I hope you enjoyed this conversation as much as I did. Markus Thielen is someone we've had on the podcast before. He is an analyst that I have personally been following for quite some time. And I guess full disclosure, Markus is a friend and someone that we're doing a course with about his excellent book, Crypto Titans, where he goes over the history of some of the market cycles that we've been through in crypto so far. So I'm pro Markus. He has been incredibly accurate with many of his predictions so far. I'm hoping that he's not accurate about this ETF approval prediction, although I think it bears mentioning that he's not saying the ETF will definitely not be approved so much as he's saying that the ETF may not be approved, and the level of certainty that the market seems to be exhibiting right now around its approval may be unwise. And primarily, if you read the full research report, it's sort of providing the rationale for that, as well as some excellent recommendations on how you can hedge that risk. So look, guys, I'm not a trader, I'm a hodler, so this is a very much an intellectual exercise for me. But if you're out there really trading, then man, I got to tell you, you got to read the full report, right? So go to 10xresearch.co, and we'll see you next time.